now our trader rundown. Joining me now is Alan Knuckman of Bullseye Option here to talk about the trading day. Always a pleasure to have Alan on the show. So I think there's two key events here happening. Janet Yellen speaking, right, and then of course we're ahead of Brexit.
Right. Well, I want to be the voice of reason, as I usually am here. The Janet Yellen, obviously that was played out last week, so I don't know what new she could possibly say that would have any impact on the market. But the Brexit issue, to me, it was interesting. The volatility that we saw last week, there was a lot more volatility than there was negative price action. Usually there's that relationship there, that inverse relationship, but that wasn't the case. VIX popped, but the market didn't sell off. It was only down 1% last week, and we got all of that back yesterday.
No, so that is interesting. What is that telling you about Brexit?
Well, that's telling me that I don't think the market is that concerned about it. I think people got emotionally wound up more so than the price action. You can see that the markets in Europe bounced back yesterday. The currencies have bounced back. We saw a big reversal last week in the VIX, gold, and in bonds. So that set itself up for this not being as serious an issue as some people had thought.
Now, for some investors out there who they're looking at the market, maybe they're thinking about investing for the first time, what would be some more maybe conservative plays that somebody could do as there's so much uneasiness in the market?
But there's always uneasiness. There's always uneasiness.
It's a bit heightened though.
Right, but just because we've rebounded and we're back at the higher end of the overall trading range. From a risk-reward standpoint, you want to be buying when things look bad and selling when things look good. But there are some longer-term positionings that you could probably take advantage of, something like a GE. GE's been trading between 28 and 32 for the longest period of time here for 8 months, and that was after it traded in that same $4 range for a year and a half. So, it's got upside, but it doesn't have that much downside in the near term. And if you could buy maybe a January option, you've got plenty of time to ride some ups and downs.
Would you take advantage of any broader market strategies here, Alan?
Well, I'm looking for the S&P to try and make another attempt on the highs, and then we'll see how the markets react. So a move above 2120 is very positive. But if you look at the Russell 2000, the IWM index, that's been lagging behind. It's down 9% over the last 52 weeks. So a push up to the 120 level here is very positive, and that targets 130. So I think the small cap stocks are a sector to focus on in the long term.
Thank you, Alan.